Is the oil age coming to an end? It's a resource that has sparked countless wars and polluted the environment. But for the first time, the so-called lifeblood of the global economy is facing a crisis like never before.
For the first time, benchmark U.S. oil prices have crashed into negative territory, meaning producers are now paying buyers to take it away.
The sharp collapse in oil prices reflects the broader drop in demand all across areas of the economy.
Analysts have long predicted when peak oil demand would strike. But now a report by energy giant British Petroleum suggests that the coronavirus pandemic may have hastened that long-anticipated tipping point.
The streets no one is driving along, the journeys very few are making, the oil we're not consuming.
As lockdowns kept millions of cars off the roads and airplanes grounded for months, oil became almost worthless.
Daily crude consumption fell by as much as a third earlier this year, sending prices to the bottom of the barrel and stockpiles soaring.
And to top it off, a spat between Saudi Arabia and Russia over oil production drove prices even lower, creating the heaviest stock market sell-off since the 2008 financial crisis.
A 3-year-old pact to cut oil production fell apart when oil giants Russia and Saudi Arabia disagreed on further cuts. The Russians, who were allies but not members of OPEC, ended up refusing even to comply with previous reductions.
The coronavirus pandemic will most likely be contained sometime in the future. But according to BP's report, oil consumption might never fully recover. BP predicts that the pandemic could lead to permanent behavior changes, with people traveling less and working from home. All will lead to drastic cuts in oil demand. COVID-19 disruptions may also lead to a process called deglobalization. Countries will move to decrease their reliance on imports, especially energy, and work to reshore supply chains closer to home. The report also predicts that the future's energy mix will be more diverse. Not returning to previous levels of oil use will be a boon for the environment, but not everybody might be happy.
And this year, Middle East producers are expected to earn $270 billion less in oil revenue. At the same time, Middle East oil exporting economies are expected to contract 7.3%. Just as an example, the biggest economy, Saudi Arabia, is predicted to have a budget deficit of $112 billion this year.
A Saudi budget deficit of $112 billion. That's larger than some economies. The country's wild spending habits have been heavily dependent on oil since its discovery in the 30s. It's the main pillar of the kingdom's power. But Crown Prince Mohammed bin Salman launched his Saudi Vision 2030 to try and diversify the economy and reduce the country's oil addiction. But will it be enough to avert disaster? OPEC, the oil cartel, marked its 60th birthday this week. But with a predicted free fall in revenues, there's very little to celebrate.
World oil demand will fall more steeply in 2020 than previously forecast, OPEC said on Monday. In its monthly report, it predicts demand will tumble by 9.46 million barrels per day this year.
Another OPEC member that could be in for some belt tightening is the UAE. Although it has the most diversified economy in the Gulf, it remains extremely dependent on oil, especially when it comes to funding foreign military adventures like its disastrous interventions in Yemen and Libya. The UAE's military budget has seen huge boosts, and some estimates put its expenditures north of $25 billion a year. So if BP's predictions prove true, a lot of oil-dependent countries will see their financial lifelines drastically reduced. What will that mean for regional stability? What will it mean for the global economy and the environment?